Thank you very much. This is a great opportunity. I appreciate the opportunity to be here. I think I've been to every Orlando money show. Any of you here at the very first Orlando money show in early 1980s, I think? It was really a great occasion. So if you have survived, you deserve one of my books. So that'll be at the break. So the first 50 people who come to 104 get a free complimentary copy, autographed copy, and you get to choose your own number, which is pretty cool. So if you have a favorite number, let me know. You just can't have 1 or 2. So this is really a great panel. Let's give applause to each one of our guests. You've all heard Peter Schiff. I believe you've heard Rick Rule. You've heard Jeff Saut. And how many are familiar with Louis Navellier? Yeah, great. So this is a debate. This is a debate on gold versus equities, which is a better investment, particularly now. We know that long-term, Warren Buffett is right. Stocks outperform gold big time. So long-term, our two equity supporters here, Jeff and Louis, have won the debate. You guys lost the debate.
When was this?
This happened just now.
Oh.
So we're giving the results now instead of waiting till the end. But
gold is beating the stock market this year.
But short term, we have a debate. By the way, can we show, do you have that chart from Jeffrey? This is from Jeremy Siegel's Stocks for the Long Run. You can see this chart, Total Real Returns Index. So this is why I say long term, there's no debate. Stocks way outperform bonds, way outperform T-bills, way outperform gold, and of course the dollar has been losing value forever.
What year does that chart start?
1802. Oh. Older than you, Peter, so that's the case.
Older even than Mark.
Yes, that's true. So the debate really is now because, as Peter just pointed out, gold stocks, now I don't know about gold, but gold stocks have outperformed the stock market this year, you're saying?
No, gold has outperformed the stock market.
Gold.
But gold stocks have outperformed the last 4 years, and they outperformed last year.
Yes, well, you're catching up finally, catching up. Good.
About time.
So this is a good point to be made. Let's go with Louis. Equities, Wall Street is at an all-time high and has been hitting all-time highs year after year since 2000 and what it made it back to in 2000.
March of 2009.
No, that was the bottom.
Yeah.
But when did the stock market hit an all-time high above its level of 2007? I think it was around 2013 it finally made it back, 2013. And you've been hitting, and meanwhile gold since 2011 went through a treacherous bear market, and Rick can speak to that. And you can too. You had a mutual fund that really underperformed for a long time. I mean, it was you must have suffered terribly.
We didn't underperform versus other gold stocks,
yes.
Ones we outperformed.
Let's compare it with forecasts and strategies.
Oh, you're so cruel. You're so cruel, Rick. All right. So, Louis, we're at all-time highs, so maybe we should be contrarians and go with the gold people. Sure. At this time. Do you have any gold stocks in your portfolio?
No, I don't have any gold stocks, but if you live in Venezuela, you might want to buy gold because your currency is worthless.
I don't think it's legal.
We're going to become Venezuela.
Maduro is melting the gold he got from us in World War II in Uganda right now and selling it through Turkey and all kinds of weird channels. If you live in Zimbabwe, you might want to buy gold because your currency is worthless. Or if you're in Europe and you have a central bank that forced negative rates on continental Europe, you might want to have a little bit more gold. But if you're in America, the problem is gold's priced in dollars and the dollar's strong, so it's got a currency headwind. And as long as in America you can get a higher absolute return, and you can. I don't have no problem if you have some gold, but I wouldn't. I'd have it as a small allocation. But back to the market, as Mark wanted me to comment on, is it's getting a little bubbly, okay? The big stocks are getting bigger. You may know the 5 big tech stocks are 18% of the S&P 500. I would respectfully argue that Tesla is a bubble stock. It went up on short covering. Tesla, by the way, may get added to the S&P 500 later this year if we can put together 2 good quarters of earnings. I was actually in Reno last week. I have a home there, and then I have a lot of friends at the battery plant. They stopped the expansion because Tesla and Panasonic are not getting along. And so they're going out now with LG Chem batteries and a Chinese manufacturer as well. And there's an acute battery shortage. And in fact, the shortage is so acute that Audi had to curtail production and lay off people at one of its plants where it makes the e-tron, a little truck. And we wish Tesla well, but that's a bubble stock, and it's an example what you're going to see more and more as this year goes on. But this looks like 99 all over again. I had a couple portfolios up 100% that year.
So, Louis, did you play this bubble? In other words, you're famous for having beaten the market pretty consistently for a number of years. Did you miss the Tesla bubble on the upside?
Oh, yeah, well, that's a good point. I don't know how anybody buys Tesla because, I'm like licensed with the government and insured. You can't get E&O insurance unless your companies make money. So whoever recommends Tesla better be self-insured, okay? All right?
No, we're just talking about playing the stock.
Well, I know, but I have clients, and...
Well, that's true. You do have clients. But didn't they call you and say, Louis, you're missing out on this great run-up. This reminds me of the old days of the penny gold stocks, right?
No,
they didn't make any money either, but you doubled and tripled and quadrupled your money.
It went up on a short squeeze. And listen, I'm not anti-electric car. I own one. It's just not a Tesla. I only get like 278 miles range, but I didn't take it here. It's not going to survive the competition. It's got the Mustang coming. It's got VW Group. GM's done a deal with LG Chem. I have 3 people that are dead in Teslas, and that was all the same. Broward County, 2 kids, one 48-year-old anesthesiologist, all burned alive. Door handles wouldn't open. So I have my own personal reasons, okay? But I don't want to own one. If you have one, just don't crash it, okay? And but the Model 3 is a good car. They're making the Y now, but I don't see how they compete long term. Also, if you live in California like Mark does, you might have to get a power wall because they shut off your electricity now, and you have to have solar mandatory.
That's in Northern California.
Well,
I live in Southern California.
They'll shut off your power anyway, okay? Because they might find out you voted Republican.
Now, don't give me more bad news about California. I always hear bad news. So, Rick, I know you just left California, but Mark Mobius, we all know who Mark Mobius is, Mr. International. He spoke last year at the conference. He says, buy gold at any price right now. I think he's arguing because interest rates are so stinking low, the Fed is adopting this easy money policy. Gold has not hit its previous peak of $2,000 an ounce. It's relatively cheap. You buy that argument?
I do. I'm not one of those who suggests that you buy gold and forsake all other assets. I think gold has 2 functions. Physical gold, I think, has a function as insurance. It trades inversely to people's confidence, and people's confidence is very high right now, which is to say gold in historic senses is very cheap. The good thing about it as insurance is that when confidence turns bad, gold does extremely well, so a little bit of premium buys you a lot of insurance. The discussion that we're having today, gold versus stocks, in a sense makes no sense to me.
It's like gold versus Tesla.
That makes even less sense. I mean, to me, the stock market is a facility. It's not a source of information. It's a marketplace to buy and sell stocks. So why would I be against a market? Why would I be against individual companies? I suspect that gold is very under-owned. Precious metals and precious metals-related assets comprise less than 0.5% of the savings and investment matrix in the United States.
That's tiny.
The 3-decade median is 2%. I'm not expecting that gold is going to crush the US dollar or crush equities markets. I suspect that there's going to be a reversion to mean. In a reversion to mean, you quadruple demand in a skinny market. That's what I'm looking for. period, full stop. I've made, relative to my needs, a lot of money owning common stocks. I still own a lot of common stocks. I don't own the market because I'm not smart enough. That means I'm a psychologist, or worse yet, an economist. What I am...
Oh, you're so cruel to your moderator.
It's so easy. It's so easy.
See what happens when...
But, you know, what I try to buy is fractional ownership of individual businesses that I understand. I'm not suggesting, by the way, I get it all right, but I'm not interested in the topic of stocks. I'm interested in owning fractional ownership in businesses, and I think that will always ultimately be a better business than owning insurance. I just think insurance is really cheap right now.
Yeah. So, Rick, rumor has it that if Forbes reporters were really good, you would be on the Forbes 400 richest list. Is this true? Publicly, can you please reveal to you? This is the rumor going on.
I occasionally get described as a billionaire, and I guess if you don't discriminate in terms of what currency they're reporting in, as an example,
in pesos, you possibly could be a billionaire in pesos.
Even in dollars, that is Zim dollars.
So, Jeff, I'm going to give you a quote from Jeremy Siegel about gold. He says, "Gold is an insurance policy, a safe haven against chaos, but it is a very expensive insurance policy, and that's why you don't want to overdo it." You agree or disagree?
I don't disagree with that. There are times to own gold, and there are times not to own gold. Maria Bartiromo gives me the credit for the term stuff stocks. When China joined the World Trade Organization, I figured per capita incomes were going to go up and people were going to buy more stuff. And we owned gold, and we owned Archer Daniels Midland, and we owned stuff. And I stepped off of that when I was raising cash with the Dow theory sell signal in November of 2007. I was trying to get to 40% cash, so we sold just about all the stuff stocks. I have started to tiptoe back into precious metal stocks, American AEM being one of them that I have bought.
Okay, Rick. Rick, by the way, if you mention any stock, this is the man who will either nod or shake his head on whether you should. So he's agreeing with you.
So I've bought a couple of precious metal stock. Gold looks to me, and I'm not a gold bug by any stretch of the imagination, but it looks to me like gold's going to trade higher.
Very good, very good. So you want to come over on this side of the, join this group here?
I don't want it to be too crowded on this side.
So Peter, what's your favorite, Steve Halpern asked a lot of us, I don't know if all of you were asked, I was asked to give the stock of the year, okay? So Peter, what is your stock of the year? And if it's not a gold stock, then we know that you're not a true believer.
Well, my gold fund. Why buy one stock when you can buy my entire fund?
Yes.
You're a Pacific Capital
And who
Gold
manages
fund.
that
Adrian
fund?
Day. Yeah.
Adrian Day, yes.
Maybe
he's
here.
At this conference.
But Mark, the problem with your chart, right? We went back to 1800. That's when America was a
There we go.
capitalist.
Charts back.
Yeah, we were a capitalist nation back then. I mean, we had a booming economy. We didn't have income taxes. We didn't have Social Security taxes. We had sound money. We were on a gold standard back then.
I don't see any difference in the trend line there between the 19th century, 20th century, or the 21st century.
Well,
it's
now,
still going up.
No, but now,
gold is going up
we're
and
in a
down
bubble.
like crazy.
But there is a difference. Look, if you go back to the beginning of this century, the price of gold was under $300 an ounce. So far this century, gold is beating the S&P. And you have to look at what is going on now. We've got quantitative easing, we've got negative real interest rates, we've got massive deficits as far as the eye can see. Gold, this is not the same dynamic that we had. You can't earn what, 20 years ago, 30 years ago, you can put your money in a bank and you can earn 5-6%, right? There was a reason not to own gold because there was an opportunity cost. You could actually get interest on your savings. Now, you can't do that. In fact, 20, 30 years ago, central bankers claimed that they wanted price stability. Now they claim they want inflation. They want prices to go up by at least 2% a year.
All right,
if they're
Peter.
not going up by 2% a year, they're not happy. So the central bankers are telling you, if you hold currency, you are going to lose. So gold is your only alternative.
All right, so I'm going to quote, we're fact-checking as you speak, okay? And so here is the ultimate source of all truth, Warren Buffett. And you need to nod your head if you agree with this. Okay. Warren Buffett said, in the past 77 years, gold rose about 37 times its value. Not bad. But if you had invested in the U.S. stock market, over the same period, your investment would have grown 5,288 times.
I'm only talking about going back 20 years.
His head, so
20 years I went back.
You want me to respond, Mark?
yes, please,
Just for fun?
Rick, please.
Just for fun. Buffett also says famously that forecasts tell you a lot about the forecaster and not very much about the future, which tells you a lot about forecasting strategies. But back to Buffett's point. I think that Buffett doesn't need gold because he's so good at what he does. He's so disciplined. He buys businesses that have pricing power. He buys businesses that are prudent businesses. When he can't find something to buy, he does nothing. But then there are mortals. There are people who aren't Buffett. There are people whose intellect and discipline and means are such that they need insurance from time to time. So I think that what Buffett says applies to Buffett, but it doesn't apply to either you or I.
So, but he's not talking about his own fund, of course. He's talking about the S&P 500, which is always 100% invested.
I understand completely.
So,
I understand completely. And if you are Buffett, if you can afford to be 100% invested, if you have the psychological stability, I mean, Buffett points out, and I've experienced this because I've owned Berkshire Hathaway a very long time. If you've owned Berkshire Hathaway for as long as I have, he points out.
I've held it longer than you have.
I don't think so. You didn't have any money at the beginning. At the beginning, well, in the 40-something years, there have been, I think it's 4 periods of time where the price of Berkshire Hathaway has fallen by 40% or more in 18 months.
True.
2 observations about that.
That was when the S&P was also dropping.
The first observation, if you'll be quiet, is that 40% decline, if you're going through it, is financially and emotionally taxing. It really, really, really bothers you. The second thing is if you look at a chart of Berkshire Hathaway from 1981 to today, you can't even see those 40% declines. So if you have the financial and psychological ability to take extra risk, absolutely don't buy insurance. But if you aren't Buffett, you have to own some gold. I'm not saying that you have to overweight gold, but you have to own some gold.
Right, but look who's calling the kettle black, because while the Berkshire Hathaway stock fell 40% from time to time, your gold stocks and Peter's gold stocks have dropped 70%, sometimes even more than 70%, and you'd stay awake wondering, am I going to be still on the Forbes 400 richest list?
But you can't compare gold to gold stocks. They're very different.
But you don't,
no,
you don't have to either.
I am. I'm comparing stocks to stocks, right? We're not talking about the commodity gold. We're talking about mining stocks.
Right,
Mining
but then you might as well.
Highly volatile.
Yeah, but then you can just pull out tech stocks or internet stocks. How many of those stocks have gone down 80, 90% too?
Let's put them all in the same category, except that, to quote Doug Casey, your buddy Doug Casey, mining is a dirty, stinking business. Nod your head in agreement. Or
It's a difficult
dirty,
business.
stinking business.
Absolutely, Mark. I mean, I remember back when you recommended gold stocks when they were, overpriced. I remember once you picking.
And he will again.
I remember once you picking a gold stock because it had the same name as your daughter.
That's true.
If
she bought a brand new car, not a Tesla, but brought a brand new car with that.
if that's the way you pick gold stocks, they're very, very dangerous.
That's just as good as your method.
I don't think so.
Okay, so we haven't heard from Louis. So you're not a gold bug.
Mark.
But, I mean, there is one gold stock that I found. It's not really a gold stock. It's a gold mining finance company.
Yeah.
It has a good long-term upward trend.
Yeah,
Would you recommend that stock?
Franco, which is your stock,
Franco
Nevada shows up on my screens all the time. It doesn't have the fundamentals I want, but it's showing up on the screens because somebody's buying it. Must be you. Okay. But there seems to be persistent buying pressure under it. So if If you want to tiptoe in, that would probably be a good one to own.
Royalty.
Yeah.
It's a royalty streaming company.
I know exactly what
so
it is.
Tell us what your thinking is. You buy the traditional gold stocks themselves, the mining companies, not the finance mining companies. What's your opinion of Franco-Nevada?
It's one of the best operators out there. It's got superior management. But I also own physical gold. My dad, I asked him when I was about 10 years old, I said, why are you buying a 1 ounce double eagle every month? That's when gold was fixed at $35 an ounce. And he said, because I can buy it for $40 or $45 or $50, I know exactly what my downside is. It's $35. And yet I have unlimited upside. So when my father passed away at 93, I inherited almost 100 double eagles that are in the lockbox that I'll never sell. My son will get them.
Well, you see, here's the difference. I, on the other hand, hold on, I carry with me, and as you know, I'm unbiased. I carry with me not a double eagle, which I think are beautiful coins, but this is the best looking bullion coin, 1.2 ounces of gold. You know what this one is? Mexican 50 peso.
Try and pay your hotel bill with that.
Oh, they'll take it. They'll take it, believe me.
Bets.
Anyway, I carry this in my back pocket to give Trump a hard time whenever I see him. I said, take a look at that. That's really the real thing. You guys are gold bugs. How come you guys aren't carrying gold with you?
I don't know. I have too much to carry around.
True spoken as Scrooge McDuck. Scrooge McDuck. Exactly.
You know, the dentist will take that because they can use it to fill your teeth.
And I might need some of that. Yeah, exactly.
They are pretty.
So tell me, what about, you mentioned, Peter, you waxed eloquently about Fed policy and their QE plus type of policies. Do you not, can't we both agree that both equities and gold will likely rise with the Fed adopting this easy money policy?
Well, first of all, our Fed is on the sidelines this year because it's election year, and that's usually good for the market. Our Fed is rattled by the lack of inflation. Our Fed is watching global events like crazy. That's what they said in their last FOMC statement. And I think they're alarmed by the negative rates in Europe and the weakness in Europe, as well as China slowing down with the contra-virus. So, the Fed, I think, would love to raise rates after the election, but I think that if anything, they're leaning on maybe cutting. But we'll see. We got a long ways to go.
Yeah. Well,
but our Fed's on hold right now.
Louis, there's no way that the Fed is worried that there's a lack of inflation. I mean, that's nonsense. And in fact, what they are the most happy about is that their inflation has not shown up in a bigger way in the CPI.
And why is that?
Well, the last thing the Fed wants to do is have to fight inflation because it can't. Right? The way the Fed is able to justify keeping interest rates as low as they are is by claiming that there's no inflation, claiming that we're still below 2%. Well, what happens if we actually get to 4% or 5%? How is the Fed going to put that genie back in that bottle? How is the Fed going to take interest rates up to 6 or 7 or 8% when we have all this debt? They would force the U.S. government into default.
Yeah, in fact,
this is super easy to explain, okay? So they're always going to try to scare you on the deficits and stuff. It's very simple. There's a thing called a treasury auction. I watch it. There's a thing called a bid to cover ratio, and it's fine. There's plenty of demand.
It's not fine. Why did the Fed step into the repo markets? Because
September there was a crisis in September.
Yeah, that was the overnight money because everybody was dumping money in America. But listen, there's plenty of demand for our treasuries. Yields have gone down, okay? Ever since Davos, they got nervous with Europe. Yields have gone down. It's not a problem. So when just so you understand what happens, when they cut our taxes, we stick in the bank buy the treasuries. The key with economics, and Mark's an econ professor, he'll verify this. The key with economics is have the velocity of money high, okay? Because the more we spend, the more prosperous we all are. As soon as we start to hoard our money and do nothing, the economy collapses. Yeah. So who do we have now? We have a cheerleader for America. The velocity of money is very high right now, and that's what's going on. So we can run these deficits for a while, and if it doesn't work out, Trump will take El Toro Marine Base and make it real estate, and he'll sell the Presidio, he'll sell Vandenberg. The Fed owns a lot of land.
This does raise a really important question. What will be the impact if Trump loses in November to some crazy socialist Democrat? What will this do to your equity argument and your gold argument?
Well, first of all, the DNC doesn't want Bernie. That's why they rigged the Iowa election. I mean, Bernie won Iowa.
Listen, they did it last 4 years ago with Hillary.
So Bernie might want to run as independent, but let's just assume that a moderate like Bloomberg gets the nomination because of the contested convention or whatever.
What about Bernie? What if he wins?
But Bloomberg won't hurt the market. Bernie's actually. They shouldn't run Bernie. They should run Larry David as Bernie. Larry David, very, very funny, and there's a great Bernie. And Jerry Seinfeld's VP could beat Trump. Okay, that's a winning ticket. Okay, just, Okay.
Well,
all the people who thought Trump couldn't win in 2016 now think he can't lose. Look, Bernie Sanders, if he gets the nomination, could be the next president. There's a lot of people who want or rooting for Bernie Sanders because they think he's a shoo-in to lose. I wouldn't want to make that bet, especially if the economy does officially turn down. What if the unemployment rate notches up? Something happens to the stock market.
I'll give you a bet on that. I'll give you a bet on that.
What?
What do you want to bet?
Bet what? That Bernie...
He's giving you Bernie.
If Bernie gets the nomination,
Well,
I'll bet you this gold coin that Trump's just destroys Bernie Sanders. You want to take that bet?
You give me odds.
Take that?
Give me 2 to 1
no,
odds.
I'm not going to give you odds.
Give me 2 to 1.
No, 1 to 1.
Shot.
1 to 1.
No, it's a long shot.
Yeah, okay.
Give me 2 to 1.
Truth comes out. Yeah.
Nikki Haley.
Come on, you don't believe him that much, then?
Nikki
so
Haley.
you think that means you don't think that means you think there's better than a 30% chance
Listen,
that Bernie
the
wins?
Democrats are famous for putting up candidates who can't win. There's been numerous cases.
The country has moved a long way to the left since McGovern. It's a different electorate right now. And of course, Donald Trump the Republican Party has moved far left. I mean, look where Trump is. The whole spectrum has shifted.
Trump is just imitating the Reagan model. If you look at what Reagan did as governor and as president, he never cut spending particularly.
He wanted to, though.
Oh, yeah, and Trump says the
doesn't
same
want
thing. Yeah, no, he said we want a 5% cut.
And he
on
was
all
in
the
favor of
budgets.
Paul Volcker. He was okay with sound
I've
money
met
and
Donald
IRAs.
Trump, and you're no Donald Trump, so that's...
I know, he's a lot heavier than I am.
Speaks well for you.
All right, so we've almost run out of time. Let's just see by a show of hands. Okay, how many think that gold will outperform equities between now and the next Orlando Money Show a year from now? Show of hands.
Oh, you're with us.
Yeah. Okay, how many think equities will outperform? Ah, I see.
What about gold equities?
Lots of room
Okay,
left in the gold.
how many think Tesla will outperform all of them? Well, there are a few hands up there for that, Louis. Well, let's thank our panel. I thought it was a great debate. Louis, Jeff, Rick, and Peter, thank you all very much.
Entertainment.